morning, everybody. You're watching SmallCapSteve Live. I'm SmallCapSteve. No guest today, so it's going to be me and Jay talking about some of the events that have happened over the weekend. You can see that the U.S. 10-year is sitting about 1.58. Oil's up a little bit. Gold's down a little bit. Silver's up a little bit. Lumber's flying. And Bitcoin has been crashing since the weekend. We'll be talking about all this and more. So buckle up. Let's get started. Jason, sweet Jason, how do you do?
Good morning. How was your weekend, buddy?
My weekend was uneventful. I did what I normally do, which is, I worked. I love what I do. I was saying this to somebody about, I was looking at another guy who's kind of like a promoter type about small cap stocks and how it seems like he doesn't actually like his job because he doesn't really do any diligence or research on anything, but sort of half pretends to on social media. And I was just saying, like, I was giving you that rant from the movie Gold, where I think it's Craig T. Nielsen who played Coach. He's staring out at the nice Nevada sunset, and he's like, what's his line? I don't have to do this. I get to do this. And honestly, I feel that way about small cap stocks. I'm so grateful that I get to wake up every morning and talk to CEOs of publicly traded companies, learn their stories, sit in front of balance sheets and income statements. Yesterday I came up with the idea of maybe we should do a weekly deep dive, and I threw it at you and it seemed like you were into it. So like last night I find myself, it's a Sunday at 5 o'clock and I'm trying to understand Lordstown Motors ultimate cap structure because it's a little convoluted. But I love doing this, and it's sometimes hard to pull me away on weekends from work because I just sincerely love sitting around reading about stocks, understanding how things are structured and trying to figure out where, I can generate yield from deploying risk capital.
Yeah, I mean, Lordstown is a special beast. Any SPAC is, in my mind. I mean, we'll get into that on when are we doing that? Wednesday?
On Wednesday. So I'm trying to put together some materials beforehand so that we're fully prepared. But I was thinking we could make this a once a week thing where if you guys have stocks you want us to look into, happy to do it. I don't want to spend a lot of time on Canadian micro caps or small caps. I'll give you a hint. Most of them are pump and dumps. I don't really feel like spending a lot of my time on it. I do like looking into these NASDAQ issuers though, because there's real tech, there's real business, there's real money deployed. It's just, to me, it's a lot more interesting. In Lordstown, which, they've got a partnership with General Motors, which is one of the most historic companies in the world. They've, got hundreds of millions of dollars on their balance sheet. They're trying to enter this massive total addressable market opportunity. But they've also done some pretty sketchy things that are pretty fun to talk about. Of course, Nate already covered it over at Hindenburg. But I'm excited to do that on Wednesday, and I'm hoping that we can do that more frequently every Wednesday. So if anybody has any stocks out there in the audience that they want us to look into, preferably.
You know what, Steve? We should probably say like minimum 150 million market cap. Exception is new issuers, obviously, that aren't yet public or about to be, whatever. That's a bit different. But I mean, I know you much prefer the big board listed down south versus what's up here in Canada a lot of the time. So,
well, there's been a lot of interesting ones. I think 3 years ago, if we wanted to do this, it'd be a waste of time. But now with SPACs and there's just been a whole bunch of these IPOs. There's interesting things to talk about. It. I ignored it for the first year, but I can't ignore it anymore. There's real businesses that are doing real things going public in the U.S. And here in Canada, we had like 75 psychedelic issuers, and it's not to say that there's not going to be real psychedelic plays that come out of Canada, but the vast majority of those were pump and dumps, like probably 85%, and that might be putting it nicely. And then, we look in the mining space where people just effectively go and grab a $30,000 property, throw it into a shell, and try to tell a big story while they're blowing out their paper. So like it's eating away at my soul a little bit, if I'm being honest. So I like equity analysis. I like actually doing homework and looking into these things. So I think we can have a lot of fun starting to dig into some of the U.S. issuers.
Absolutely. I mean, we'll get our start Wednesday, and let's get some prep materials going probably tomorrow night.
Yeah.
Ahead of it, so that we don't just come out here going, I don't know a thing about it, right? So,
yeah.
But yeah, let's get into it.
I'm hoping that young Justin will join us too, who's a valuable member of our team here, and he networks pretty hard. So I'm sure he's got some people that'll reach out to him with some interesting diligence. But ultimately, I don't want what we do to just be crapping on companies, because I am a romantic about business. I like to see things work out. But at the same time, we also don't want our audience out there who's looking at these things to go, shit, you guys had nice things to say about what's effectively looked like a pump and dump in hindsight. So you got to be careful, because that's venture capital, that's small cap stocks. There's a lot of bad actors out there. We're going to try to help you guys navigate and ski this environment along with us. So we'll try to stay positive, but if there's risk, there's risk. And we're going to talk about risk quite a bit.
Absolutely. So what do you got on the board for today's show? I don't even know. I was late getting to the pre-meeting.
Okay. So first off, and I got some of your articles up from the deep dive, but there was an article that came out over at the New York Times, the Canadian cannabis companies. It's after green rush, Canada's legal pot suppliers are stumbling. So let me pull up this article here for you, Jason, because
talk about stating the obvious.
Okay, I get it. You're not you're not exactly buying it. Let's pull this up here.
It's not that I'm not buying it. It's just, yeah, everyone's known this for 3 years already.
Okay. So Exeter, Ontario. By the way, my wife's from just outside of Exeter.
Exeter is where Campy Growth. No, Aurora had that facility that they bought for the PR basically and closed it all down, isn't it?
Close. What was the company that Aurora took out? Where
MedRelief.
MedRelief bought it, and then Aurora, MedRelief clearly bought it to have square footage on their investor deck, and then Aurora bought MedRelief to have more square footage on their investor deck. And they actually filed, like, we almost covered the story at the deep dive. I've got a whole bunch of emails of me emailing the mayor of Exeter, the former owner of this greenhouse, trying to look into this story. And it looks like the New York Times, look at this, we're fighting with the New York Times for a scoop here. And I have the emails to prove it. From 2 weeks ago. Le Predacteur saying we got the Mafia at 12:30. Chris, I don't know. Does that mean we got young Justin joining us at 12?
Must be. Yep. There we go.
We're getting young Justin on at 12:30. That's fun. Okay, so here's the scoop. The mayor of the largely rural community of South Huron, Ontario, was looking forward to an employment boom when a marijuana producer used its soaring stock value to buy an enormous greenhouse on the edge of the municipality's largest town. The purchase 3 years ago in Exeter promised to make his sprawling community a major hub for what seemed like Canada's next big growth industry, legal pot, and the high-paying jobs it would bring. But before any of the 200 or so anticipated jobs in the greenhouse were filled, or before a single marijuana seed was even sown there, it became apparent that Canada was already growing far more marijuana than the market wanted. After sitting idle for 2 years, the 1 million square foot greenhouse was sold last year for 1/3 of its original purchase price of 26 million Canadian dollars, or 20.75 million. Exeter's experience with the greenhouse, high hopes followed by disappointment, mirrors the broader Canadian story with the business side of legal pot.
I just want to point out something. It's weird. It's because I'm an editor, but every single paragraph there was one sentence. The hell is that?
It's the New York Times. They got nothing on the dive, baby.
Sorry, carry on. It's bugging me.
Analysts say one reason the sunny projections have failed to materialize is the tightly regulated distribution system introduced by Canada, which largely bans advertising and marketing. That's it. It's advertising and marketing. That's the reason this isn't working. Sure, guys. The halting role.
but they're referring to analysts. There's your problem.
That's a good question. What analysts are they talking to, right? Okay, so the halting rollout of stores in some provinces, particularly Ontario, is also a factor. Plus, surveys have suggested that many Canadians are simply not interested in adopting a new vice. We were looking forward to it, said the mayor, George Finch. I don't think that's the person I emailed. Standing outside Exeter's 19th century town hall. Sounded too good almost, eh? I love how they got the A. I wonder if that was even in the original quote.
I question his original quote.
It's too bad. So it may well revert to vegetables again. Oh, look at that. When Prime Minister Justin Trudeau's government legalized marijuana in 2018, the primary goal was to create a more equitable justice system, not a major new business sector. Investors, however, thought otherwise, and in the time leading up to legalization, a green rush swept the Toronto Stock Exchange. Money poured into companies starting to service not only the Canadian market, but also eyeing other opportunities, particularly the U.S. market, where more states were embracing legalization.
There's so much garbage in this article. Like, Trudeau did not look to... Can you scroll up just a little bit there? Okay. Trudeau was not looking to create a more equitable justice system. The rules now against, like, call it black market cannabis is far, far stricter than what it was before. Like, that's one of the number one complaints in Canada. Like, carry on. like between that and, like, this constant blaming of the Ontario rollout, like, you can only blame the same thing so much before it's like anyone can buy it online via the OCS. So sure, retail stores might make some semblance of a difference, but at some point it doesn't matter. Those who want it will buy it online.
You know what I don't find in this article that I find kind of interesting, that was the premise of our story that I was told based on the leads, and I apologize to the fine folks of Exeter if this is incorrect, but I was told that this greenhouse was actually operational and they ended up shutting down the jobs.
That's what my understanding of it was too. It's an operating vegetable greenhouse with something like 30 employees, and then it's down to like one employee. Yeah, which it doesn't sound like much, but when you're a small town of a few hundred, that's huge.
Yeah. Let's. They took a jab at Europe here, which I thought was interesting. I'm trying to find the quote here. Where was it?
There were Control F.
Large just pointed at home. Some of the large growers in Canada have pointed out to foreign markets, particularly for medical marijuana, as their great next hope, or as their next great hope. But many analysts are skeptical.
Show me one skeptical analyst. Like, when I say analysts, obviously I'm referring to the banks. Like they all seem to say the same thing.
Like Bottomley?
Yeah, exactly that. Like, none of them are skeptical. They all say, "Oh yeah, it's a next great thing." And saw Bottomley do that with Curaleaf like 2 weeks ago. Did he not?
It's like Curaleaf is. Let's move on here. This is just, it's going to turn into a rehash where we say the same thing. Europe is.
I know.
Canada. It's clear. Just in case you are new to the Canadian stock market, cannabis went legal. There's tremendous investment appetite. The only thing that made sense for investment banks to do was raise money for cultivation facilities. And then once it was clear that the investor demand chewed through more than enough of that, it then turned into let's find a story for raising more capital and building more square footage, which then turned into Europe, which clearly at this stage you have to be shaking your head at. And of course, Curaleaf today bought a European operator, which everybody who seems to be close to Curaleaf says is a fantastic transaction. But those of us who saw what happened in Canada are left going, what?
Yeah, I mean, in there it talks about the net losses and everything else that these producers are incurring. It's like, well, yeah, you've got more. Do you really need 1 square foot per Canadian citizen per year, or is there going to be that much consumption?
No.
Like, really?
Let's move on. U.S. safety regulator issues warning about Peloton's Tread Plus treadmill. I refuse to watch the video. There's a video that you can see on the internet.
I saw a small kid like crawling around in a snapshot, and that was enough that I didn't want to see the rest of it.
Yeah, I got little kids. My son Carson had his first day of daycare this morning. When you called me earlier, that's speaking of which, I forgot to put my phone on Do Not Disturb. Let me do that right now. Yeah, I don't want to watch that. But let's take a look here. This is from CBC.ca. U.S. safety regulator issues warning about Peloton's Tread Plus treadmill. Warning follows of Tread Plus incidents in which one child died, others injured. U.S. safety regulators warned people with kids and pets Saturday to immediately stop using a treadmill made by Peloton after one child died and nearly 40 others were injured. The U.S. Consumer Product Safety Commission said it received reports of children and a pet being pulled, pinned, and entrapped under the rear roller of the Tread Plus treadmill, leading to fractures, scrapes, and the death of one child. The commission posted a video on its YouTube page of a child being pulled under the treadmill. New York-based Peleton Interactive Inc. said in a news release that the warning was inaccurate and misleading. It said there's no reason to stop using the treadmill as long as children and pets are kept away from it at all times. It also turned off when not in. It is turned off when not in use, and the safety key is removed. But the U.S. Safety Commission said that in at least one episode, a child was pulled under the treadmill while a parent was running on it, suggesting it can be dangerous to children even while a parent is present.
I'm trying to figure out how that works. How, like, isn't this thing like effectively on the ground? How can a child actually get pulled under? I don't understand that.
You know,
like in every other treadmill is fine. What's so different about how the Peloton is?
That's the problem, bud. Right there, you just nailed it. You just nailed it. Jay just nailed it for you folks. 1 second here. Let me get this pulled over. I want to pull up the chart here. Here we go. PTON.
Okay, no. It's quite elevated by the looks of it.
So stock's down 9% today. So Peloton is getting slammed from this. I don't see this honestly having that big of an impact.
No, I don't. Here, I'll share my screen quick because it's the answer to the question I had. So Peloton decided to be all fancy, and it's easy to see how it can get pulled under there. There's plenty of room, right? Like, it's not like your standard 1990s treadmill where it's flat to the ground. There's quite a bit of room there. So that makes sense.
So high level, is there something you could do to fix it, or is it maybe just smart to be really cautious about using a treadmill around a little toddler?
Is it smart? Yes, but I mean, I also understand how many people live in condos and apartments that they just don't have room otherwise, and you're trying to stay healthy. I mean, I'm not going to fault someone for that. Mm-hmm. Now, how this sticks on the stock, we might have a red week overall, but I don't foresee it having a huge impact unless massive lawsuits start forming.
Sorry for interrupting you there.
No, go ahead.
I was just going to say this would be a fun stock for us to actually do some diligence on one day. Let me pull up here on Y charts here. So this is their most recent. Like, you can really see that is somewhat explosive revenue growth there, going from 100 million a quarter in Q3 of 2018 to $1 billion a quarter. I mean, you see your quarterly revenue grow, or your quarterly revenue 10x over, what's that, like 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters. That's pretty good. $4 billion revenue run rate. I don't even know what it trades at. I don't even know what the market cap is. Let's take a look here. The market cap is 30.99. I don't like that. Doesn't sound. they're selling hardware, right? So you don't want to put a huge multiple on that.
But
there
they
is
do have the software component.
Yeah. So this is a fun one. This would be a fun one. And look, according to this here, cash flow from operations in the trailing 12 months, they've done close to $1 billion. I don't hate Peloton. I don't hate it. Very, very high level. Very high level. Very high level.
High level, I go back and forth. Like, it's got a very strong multiple for what is effectively a hardware company. Sure, it's got a SaaS component. I don't know how it breaks down. For all I know, it could be 75-25 or the inverse of that. But it's workout equipment.
Yeah.
But they have free cash flow, which is abnormal in today's world. So I'll give them credit for that.
It's also got a very, very, very impressive growth profile, right? Like, let's
yes, but is it sustainable? Right, because I imagine you saw a boost in sales. Can you pull that up again? When was the last quarter reported there?
The last quarter here. I was going to do this as a 1 second here. There's a chart here, revenue.
So
you can kind of see here. Let me get the price off. So you can kind of see here. Let's go the last 5 years or so. You can see here how it's gone from 100 million to whatever period that is, September 20. So calendar year Q3, $1 billion.
So my question here is it sustainable? And the reason I asked that is 2020 was an anomaly for every sector, right? People were stuck inside. They still wanted to work out. There was places where they weren't even allowed to hardly leave their house unless they're walking a dog or something of that sort. So they were buying workout equipment to try and stay in shape, right? So 2020 sales may not be consistent with what we see going forward.
Yeah. I think it's interesting. It's certainly, how I'm a sucker when I see a company that's generating real operating cash flow. I mean, we're still paying on a trailing 12 basis. So I guess trailing, you're paying, over 30 times for that operating cash flow. And like you said, I mean, a lot of that's a hardware component. How recurring can any of that be in addition to, the fact that we think about it, people are eventually going to start going back to gyms, and for myself, I'm a bigger guy. I like gym equipment. It's hard to replicate it at home. There's something to be said for gym quality equipment as opposed to what you have at home. It's still kind of nice to get out of the house. But I don't know.
Yeah, I think the gym will quickly become a social thing post-pandemic. Just because people are just looking for an excuse to leave their four walls, right? Like, so
it sounds like what you're saying is that this is not a GARP stock for you. It is not.
I don't have a clue what that is.
GARP is. I'm surprised you don't know what GARP is. Growth at a reasonable price. You don't think that it's a reasonable price. It's certainly growth. There's
growth there, but my question is, I'd like to see it sustained for another year, right? Because I don't, especially in the US where lockdowns are coming off. Canada, it's a different situation. I think everywhere just in the last 2 weeks locked down again, from like sea to sea. But down south, I know that things have opened up significantly. I don't know the status of things in California, but I feel like if someone that's in lockdown in California doesn't have one by now, they probably aren't going to buy one anyway. So I just have a hard time seeing the path forward, because to me, their equipment I don't use their equipment. I don't work out. I'll be honest. Is their equipment that much better than what else is out there? I don't know the answer to that question, and that's really where things lie. Now, there's also a social component, because my wife sees this and she's like, "Oh, I'd love to get one of those," and I'm like, "I'm not paying that much money for effectively a treadmill or a cycle that has an iPad on it. Doesn't make sense to me."
Don't forget that it also has a drastic impact on your hydro bills, or we call it hydro in Ontario. You guys call it electricity bills. I don't know what you guys call it.
Hydro is water, Steve.
Yeah.
Hydro, water, not power.
You know why
I know where it's derived from. Because of Hydro One, that big scandal that happened out there.
Well, no, it's actually derived from the fact that for the longest time, the majority of Ontario's power came from Niagara Falls. which is hydropower, right?
Yes, but still power. Power, not
Yeah,
hydro.
but I'm just telling you that's what
I'm
people
just
call
saying,
it.
people in Ontario are backwards for compared to the rest of the world.
Well,
It is what
yeah,
it is.
because we are ahead of the curve. We're ESG folks here in Ontario. We have clean renewable power. Not like you guys in Saskatchewan digging up uranium like a young what's his name who Doc. What was Doc's last name from Back to the Future?
No clue.
I don't know. Anyways, Bitcoin's in the news.
Bitcoin took a shit kicking.
What's happening here to Bitcoin, guys?
So now, were we talking on air on Friday when you and I discussed Bitcoin?
I'm not sure.
Do you remember our conversation?
No, I might have been high. I started smoking weed. so go
basically
for it.
What the conversation was we, as everyone knows, Steve and I compare everything to the cannabis sector just for comparison's sake, right? Notably, the cannabis sector fell. The high point of the cannabis sector was the day before legalization in Canada. So basically, the theory was the Coinbase IPO that high point for Bitcoin. Now, here's the logic behind it. A lot of people previously could not really gain exposure to Bitcoin and its price movements without buying in through some entity, some way, somehow on a crypto exchange. However, you can now gain exposure to Bitcoin and other cryptocurrencies directly by just, in theory, buying Coinbase. Why? Coinbase is the exchange, and as we saw with their first quarter 2021 results, they're heavily impacted by positive markets. So thinking goes, the name will go up as that exposure delivers, right? So was Coinbase the sell the news event for the price of Bitcoin?
These things happen. I'm trying to find. Raven had a tweet out the other day about that was kind of making its way all over social media. Let me pull this up.
On the topic of Bitcoin, our daily dive episode today is with Chris Vermeulen of the Technical Traders. It was filmed on the 13th, so before the fall, and I will give him full credit here. He called what happened quite well. So you guys will have to check that out. It was filmed on the 13th last week. It's coming out today because it takes our staff a few days to do their awesome editing and everything. But Chris outlines what happens pretty well.
What did Chris call?
So without giving the full episode away, effectively what he says is bulls are getting exhausted. You can see that by the massive pullback constantly seen every time they hit a new high, and that he effectively said that he feels that it's very likely that this thing will start to fall, and when it falls, it's going to fall fast. It fell fast this weekend.
Yeah, and that's what here's Raven. If BTC goes green in the next 24 hours, it goes. This was on, I think Saturday at midnight, just after midnight. If Bitcoin goes green in the next 24 hours, it goes to 100,000 before May 1st. And he's generally a guy who hates Bitcoin, and probably a meaningless tweet because we're all just trying to figure out this thing that's got a million variables determining what the price action looks like. But look, I mean, at some point, people are going to realize that they can't push this thing any higher, and we've seen what this stuff looks like when you reach that zone where buying just doesn't push it anymore, and bulls start to realize it. They do get exhausted, and then if the shoot, look, we've seen Bitcoin get whacked before, and it didn't go all the way down. It came back up, so. Who knows? But I tend to think that Coinbase probably is going to create some near-term bearishness for the crypto, names.
Segment as a whole. I think this weekend the only thing green was, I can't say, Dogecoin.
Yeah. I'll pull up the chart here. Dogecoin,
and that's only because it's a massive pump.
which has a $43 billion market cap, by the way.
That's just embarrassing.
It's embarrassing.
Like it's a meme.
It's a yeah. I mean, that's there you go. Dogecoin trading at 39 cents, which
Wouldn't you hate to be one of those guys that was just trading this thing back and forth sub pennies with millions and millions of shares, and now it's at 39 cents and you have nothing left?
here's a look at cryptos by market cap as our man Young Justin's
Jeez.
We can see Bitcoin, $1 trillion market cap. This thing that doesn't really it doesn't generate any cash flow. The only reason to buy it is because you think it's going up. To my knowledge, nobody's using it as a currency, not in my world. And it's got $1 trillion market cap. I don't know. There's the. Go ahead, Jay.
You saw me. Ethereum truly, I think, is much more valuable than Bitcoin. And that's because the whole smart contract thing is based around it, and there's actual use cases for it. Now, like, the main problem with Bitcoin is it's so expensive to transact any sort of purchase, right? Like, you're effectively paying like $10, $12, $13 per transaction. So it's not realistic to use it as a currency. You go and buy a $1.99 Coke and you're paying $14 by the time your fees are done. Like, It doesn't work.
Well, now joining us on the show here, the great Young Justin. Mr. Justin, how do you do?
I'm doing pretty well. How are you guys doing?
Well, it looks like you whitewashed your room. It's so bright in there.
Yeah, what's with this lighting?
It's pretty bright in Hamilton, I guess. You know, the sun's out.
It's awfully bright for a basement.
Sun's out, sun's out.
Cars.
So, Justin, what's in the news that's catching your eye? You wake up every morning really early. I know this because when I try to reach out to you after 9 p.m., I'm like, oh, Justin's probably in bed. Because I know you're one of those people. You can't wait to get up in the morning. You're chomping at the bit. You want to get to your terminal. The only 19-year-old I know has a terminal.
21-year-old.
21-year-old.
Let's make that clear.
Okay. He can legally drink in the U.S., ladies.
That's true.
But what's so you get up, you get to your terminal. What's got Young Justin excited today?
Well, there's a few interesting pieces of information or news that came out today. First was the CEO of GameStop stepped down.
I didn't catch that.
Kind of interesting. That. Yeah. I don't know too much about it. I just read like the headlines and that's kind of all I know. And the other thing,
he should have been booted.
Yeah, well, I think him and the CFO should be booted, right? I mean,
why would you not raise money? Like, come on.
That's my thinking. And then the other thing, the other interesting thing is the co-heads of Credit Suisse's prime brokerages stepped down in wake of Archegos and Green Silk. So that's kind of interesting.
Justin, I haven't cared that much about the Archegos thing at this point because it's like we're not really getting a whole lot of tidbits of what really went on beyond what kind of initially came out. You know what I mean? How did this guy get all this leverage? Was he, effectively committing wire fraud by collateralizing the same securities at multiple banks? This is something we always hear about investigations, and half the time I roll my eyes going, okay, what are they actually going to find out? I would love an investigation on this one to find out that, like, chronologically how this guy pulled this off is very fascinating to me. But I've seen 10 articles that say that they can explain to us what happened at Archegos and with all the prime brokers. Nobody actually can explain it because nobody really knows exactly what happened.
You know what the best explanation is? Our own Braden Mackey actually put out the best explainer out there. And you know what it said? There's no way to know.
Yeah.
Right? Like, and I know that's not a satisfactory conclusion, but we're never going to know. There's going to be two people that know, and that's probably Bill and maybe his wife. Right? Like, really. If the bank knew he was doing this,
there's a way to know. I mean, there can be an investigation where they go and they find all of his trade records and they take a look at who was letting them allow to leverage and the chronology of how it all happened. But we're never going to get that.
Yeah,
You're never gonna get that. That's what I'm getting at. Like
Mm.
it's Bill that knows, and maybe his closest people. But even then, I imagine a lot of them would be in the dark.
Like, you know, in this case here, if they actually started asking for everybody to hand over trade data, I think that they could get to the bottom of it. But I suspect nothing will come
people
of
will
it.
go missing before that happens.
yeah, no, like, yeah. I think the most interesting thing was on Friday. Morgan Stanley reported their earnings, and they reported, I think it was a $900 or $811 million loss due to Archegos, and the CFO said something very specific where he was like, the way that we think about the collateral that we had was based on like untrue facts.
Mhm.
With the reasoning, like, you know, if the guy had swaps in every single or at every single prime brokerage, you know, your money that you think you can dump if the client can't reach their margin call is now worthless, right? If everyone has to dump at the same time. So I think that's kind of what he was getting at, was that everyone was operating under this kind of understanding that their swaps are fine because they were the only company, or they're the only prime brokerage that was working with Archegos, which wasn't the case, right?
Mm-hmm. So let's pull this up here on GameStop. Here's a quick little article. This is from CNN. Which, by the way, like I was doing some research on Lordstown yesterday. As a Canadian small cap guy who's used to using CDAR and knows where everything is, and I know everybody complains about it, I love it because at this point, after years of experience, I know where everything is. Now that I'm doing that on U.S. stocks, I hate it. I understand why people pay Bloomberg $25,000 a year for a terminal, because they actually aggregate all the information in one place where you can find it all. Whereas it's just, oh my goodness. Anyways, so here's the article. It's game over for GameStop CEO George Sherman. The video game retailer and meme stock announced Monday that Sherman will be stepping down on July 31st or earlier if a successor is found. I think we all know who'd make a good CEO. The news is not a major surprise, given that Ryan Cohen, the co-founder and former CEO of online pet supplier retailer Chewy, have been cementing his control over GameStop. Cohen, whose RC Ventures firm owns a nearly 13% stake in the company, will become GameStop chairman following the next shareholder meeting in early June. Shares of GameStop rose more than 15% in early morning trading Monday. Sherman, a veteran retail executive who has only been CEO of GameStop since April 2019, inherited a tough job, and he took over 2 years ago. I'm proud, blah, blah, blah. Sherman was charged with turning around GameStop at a time when many game console sales were declining and people were increasingly downloading new games instead of buying them from stores. Shortly after Sherman joined the company, he announced plans to close up to 200 stores. So there seems to be this idea, guys, out there that there's a pivot that GameStop can make that can make this whole valuation make sense. And they can kind of have that sort of blockbuster Netflix moment where, you know, they could take these physical stores and use their sort of customer base to grow. Justin, I know you're a bit of a video gamer. Do you think that this is actually a possible thesis?
I mean, I guess so. I mean, they do have like a large customer base, and like, I assume you can do some transitions with the stores, and you know, there's probably some turnaround success story, but like, I don't know if that success story like values GameStop at like whatever it's trading at now, like 30 billion or 25 billion or whatever, wherever it's trading at right now. I don't know if that, you know, I don't know if that captures.
I'll pull it up on Y chart for us here. Let's take a look here at some of the key stats, high level. Take a look at GameStop. GameStop. Currently, this is one reason that I don't love Y charts. It's not that up to date.
Cap, I don't think it's that bad.
12 billion revenues, 5 billion net income. Negative 200 million. EBITDA trailing 12 months, negative 155. Cash flow from operations are positive to the tune of 123 million. So why is it that you think it's not that bad, Jay?
Because this market values everything on top line revenue.
Have we gotten
Right.
to that point that we just don't even care about cash flows when we look at a company?
Well, they got some cash flow, enough to pay themselves.
Yeah, yeah.
Right? Like, we've just gotten to this point where, like, when you've got someone like Tesla that just loses money sitting as one of the most expensive companies out there, GameStop at 11 billion is not the most egregious thing out there. Like, it just is not.
Yeah.
Well, yeah, but so you and I talked to a mining company here in Canada that it was sort of like they had like some tech and they had a mining asset and they traded at a whopping like $120 million market cap. And I remember asking the IR guy, I'm saying, okay, so what is it that makes this valuation attractive for investors to get in at 120 million? There's not a whole lot on the balance sheet. And remember his response, Jay? What did he say?
Oh, his response. Should I say the company name because it was that bad? But go for it. You deliver better.
So I said to him, what makes this company worth $120 million market cap? I can see that you guys raised a bunch of money at like 10 cents, or at like maybe it was 5 cents. You then vended an asset in at like 20 cents. It's a mining asset that probably the vendors paid like a couple $100,000 for. You guys vended it in at $4 million. And yeah, they could have bought it for 30 grand. Who knows? And now it's trading at like $1.40 a share. And you guys haven't raised any cash or done anything to make this attractive. And the response of the IR guy was, well, what makes Tesla worth what Tesla's worth? And it was just sort of like this weird moment where like, there's a part of me that's kind of like, okay, we're in a bubble and these are stories that I'll be telling my grandkids one day. But then there's also part of me that's like, well, Biden just introduced the $2 trillion infrastructure bill where barely any of it's infrastructure. And they're going to, monetize the whole thing. And perhaps this is just the new normal where like, we're all just running around saying things like, well, Tesla's value doesn't make any sense. So why do any equity analysis at all? Right? Like that's honestly like what you're effectively saying to me when you go, oh, there's a much more egregious valuations out there. So it's GameStop at 11 billion seems fine. It's a dying business, by the way. There's a reason that was $5 a share.
I mean, I'm not going to disagree with you, right? Like, is it a dying business? Absolutely. I mean, I game occasionally when I have some free time, and I just download the games directly online from the vendor, right? Like, I don't need to go into a GameStop or anything of that sort to buy a game. I don't know why you would, quite honestly.
Yeah.
So we should get some. I would love nothing more than to get a GameStop bull on the show to walk us through the thesis, because I'm sure that there is a palatable explanation for this, but I think that the disruptive train has kind of moved past them at this point. What am I missing, Justin?
I don't actually know because I never really followed it much more outside the Reddit debacle, but I got an interesting topic about valuations and it doesn't matter. Have you heard of the company called Hometown International?
Yeah, I knew you were gonna bring that up. That's why I didn't.
Yes, that. Steve, do you know that company?
This is like the New Jersey deli.
Yes, that's valued at 100 million.
What is the ticker?
It's HWIN.
It's HWIN. Okay, let's talk about this. I think that this is really interesting. Give me a second here. I'm going to pull this up for you guys. So this is effectively somehow some like crappy New Jersey deli that makes like $30,000 a year in revenue.
Yeah,
it's a New Jersey deli that sits right next to a high school, and the CEO of the company is also the head coach and principal of that high school. Sorry, head wrestling coach and principal of that high school. He's been a wrestling coach for 30 years. And I don't know how you don't make a deli work when you're right next to a high school. Because I know that when I was in high school, any deli near us was like overflowing every noon hour.
So this might be fun to do a deep dive on.
I've heard it beat to shit, man.
I've heard some interesting stories about it. I heard that the person who set up the company, like who set up the ticker and got it on the pink sheets, is like a serial pump and dumper or someone who's like tied to these people who just create these companies to pump and dump. There's some interesting things that I've heard about the company. I think or somewhat recently, or maybe like early last year, they sold a lot of shares. Actually, I think they sold like 20, or they sold like $20
They raised
million
$2
worth of
million
shares.
last year. Yeah.
Yeah, which is like I mean, you gotta wonder who picked up all those shares, right?
There's a large ownership base out of Hong Kong, I believe it is. I can't remember the exact percentage, but it was notable. Largely the theory for how this played out, I believe, is so when they report their earnings, they do it in dollar terms, not thousands of dollars terms. But so like a poor man's algo, a lot of the times my understanding is they forget to look for the text that says in thousands of dollars. So then you post these earnings and it looks like 13 million to the algo, right? Because it's coded so poorly and it drives it higher.
You know what? You know what I got to say about this, and you probably know what I'm going to say, which is I've seen more egregious stuff in Canada.
I know.
Yeah.
They have revenue. What was the phrase you said to me yesterday, Steve? That if you make revenue, it's actually worse than not making revenue if it's not enough.
Yeah, but you know,
again, it's a deli, I know, but like.
Let's take a look here. Your hometown deli is a typical single unit sandwich shop in Paulsboro, New Jersey. It operates in a corner of a boxy gray and red building, mostly occupied by a performing arts school. It sells a selection of cheesesteak and hoagie sandwiches served with chips and other finger foods. Nearby is the Monster Truck Factory, a professional wrestling training school apparently featured in Rolling Stone and the Wall Street Journal. The deli has no full-time employees. Its CEO is Paul Marina, the principal at the local high school, where he is the wrestling coach. The company's vice president is a high school math teacher. The deli is valued at more than $100 million, or at least it was until Friday, when its shares plunged 15%, sending its market cap down to $90 million. The valuation of this local deli has spread across social media since hedge fund manager David Einhorn used the valuation as an example of poor federal regulation of securities, not to mention inflated stock prices. The pastrami must be amazing, Einhorn wrote in a letter to investors Thursday. Maybe, but it doesn't sell much pastrami if you look at the numbers. The deli generated just $21,772 in 2019 and approximately $14,000 in 2020, hampered by the pandemic. The combined revenues from those 2 years, $35,000, is not much more than the revenue generated by a Subway location in a single month. An amount, we might note, that has caused some consternation among operators of said locations. Most of the company's expenses are in food and beverages. It paid just $102 in labor costs in 2019 and $126 in 2020. It pays $500 per month in rent. I don't even understand that last part. How do they not have any labor? But
I've got a live shot of what the deli actually looks like here.
Okay.
Looks like your grandma's sweet deli that's built in some small town in the backcountry. I think the funniest thing in the world, though, is someone is saying that they are a millionaire because they own a single deli in some backwoods town in New Jersey. Like, I find that so funny, and like to me, it's just par for the course in the current market environment.
Well, if you're watching,
then I realize, like, we look at names like Iguana, who genuinely have so much in front of them, and the same valuation, roughly. Like,
yeah,
like what's wrong?
But one of those is, a valid investment grade security. The other is effectively just, a pump and dump. Which by the way, something that I'd love to talk about is that tweet that went out and about Coinbase this weekend. You know what I'm talking about, Justin? I know Jay knows what I'm talking about.
Yeah, the guy didn't check.
Yeah, there was a.
I just want to point out that you call H1 a pump and dump, but it just kind of has like a growth chart. It's not even a classic pump and dump chart.
Well, at $100 million, there's no way that they're.
Oh, absolutely.
There's less than a 1% chance that this thing doesn't come crashing.
Oh, and also it's up 15% today. I was gonna say just to mention that it's up 15%. So.
Well, there you go. So I want to
Maybe the pump's not done yet, right?
Yeah. So one thing I'd like to pull up here is Coinbase. There's this account called Mr. Whale. Remember when everyone said that the coin IPO was going to create a huge wave of FOMO and be so big? I don't know that anybody was saying it would create a huge wave of FOMO. But okay, whatever. Well, clearly Coinbase didn't believe that. Minutes after being listed on NASDAQ, the CEO sold 71% of his shares, the CPO sold 97% of shares, CFO sold 100% of his shares, and the president sold 100% of his shares. Well, Mr. Whale, guess what? You're a fucking idiot. That is not even remotely accurate.
But pull it back up. Just pull it back up. Scroll down. 143 quoted tweets, 606 retweets, and 2,000 likes. Now, I understand that some of the quote tweets are like myself, who retweeted and said, this guy's a fucking idiot, basically, like you said. But having its name of crypto whale just says to me that he's looking to shit on Coinbase any way he can, because he knows it's taking dollars out of the crypto market when they go public.
So you can look at this here. CEO Brian Anderson sold 750,000 shares there on the first week. This is a direct listing. There's no IPO. They have to do that in order to get some shares out into the market so that there's a float, which, by the way, I saw somebody saying, don't say that. That's stupid, blah, blah, blah. I was just like, do you understand how direct listings work, dude? We need shares to be tradable on the stock market, or else this whole thing wouldn't work.
Yeah.
Like, that's kind of how the stock market works, is there needs to be shares available. There needs to be this thing called liquidity. And here you can see Brian Armstrong, the CEO's share count. I did it at about 49 million. Again, he sold 750,000, making up approximately 1.5% of his total float. And you can see here, we may as well include those options as part of his actual share count, because we can see those prices there are $18 and $23 on a $350 stock. That's pretty much as good as exercised. So I just got to say, and I've been guilty of this.
The question. The shares that were sold, were they held by that indirect trust, or were they held directly by the CEO? That might be what the guy's referring to. Because if you look there, it's an indirect ownership.
Yeah, I tried to go through their Form 4s, and it's very confusing, because I think what happened was a fund that owned a bunch of shares distributed them, sent them to, I guess the CEO, the CFO, that stuff, and then they sold those shares. Because when you pull up the actual Form 4 that breaks down what actually happened, it's very confusing. There's like 8 notes on the bottom of the page, and it's just generally confusing, because it's not as although CD is very shitty in the way it looks, it's a lot more it's a lot easier to see where things come and go from, rather than the Form 4, right?
Mm-hmm. But look, the point I'm getting at is just be careful retweeting some stuff out there. I don't even know where that guy got that from. I don't even know why Twitter wouldn't take that down, because and the fact that got so many retweets, likes, and quotes from some people who like to consider themselves influencers and thought leaders in stocks, I find particularly hilarious. One last thing I want to cover today, because this is something that I know that Jason Lutz loves more than anything, is Tesla. Tesla had a deadly crash that killed 2 passengers. Let me pull up this story here, Jason. I know that this is a topic, Tesla, and I'm not trying to make light of people dying here. I don't mean that to sound it that way. My shot's really just on the fact that Jay hates Tesla.
Yeah. So the summary of this,
yeah, go ahead. You go ahead. You go ahead. You take this one.
So effectively, what the summary is 2 people were killed in Texas in a fiery crash of a Tesla, and authorities say that there was no one in the driver's seat at the time of the crash. That's really at the core of the entire story. There's a lot of bulls on this name who are refuting the whole story, because that's what moronic bulls do. I'm not saying all bulls are moronic. I'm saying that there's moronic people on both sides. But like, the notion that people are still trying to defend this is asinine. I don't know if it's in this story here or not, but I believe that the family of the deceased actually said that they got into the back seats, not the front seats, because they had autopilot on and everything else. What do you even say about it? Like, should they have done that? No, but at the same time, why is there not safety features embedded into these vehicles where if there's no one in the front seat, why the fuck does it drive?
Yeah.
Like, come on.
Yeah,
I don't understand that one either. And from my understanding is some U.S. agencies now probing them, probing this crash. I don't really know like too much more about it.
They'll probe the crash, but why the fuck has Tesla not been investigated for this shit already?
Yeah.
TSA or any other agency, because GM did this, Ford did this, Volkswagen, Lexus, Toyota, Kia, like literally pick any other automotive company. If they did this, they'd be shut down instantly.
They're
like what's going on here? Why is this guy protected?
Yeah. I mean, I got no clue.
Justin, I just got one question for you.
Let's hear.
Where do you think Jay hides his tinfoil hat when we go live?
It's definitely behind his chair. It's definitely like, right behind it. It's on a string. He puts it back on when we get off live.
It's actually on a pulley system. I just pull it down when the live is off.
There you go. Yeah.
Okay, so let's wrap it up here. Jason, what's going on today at the dive?
This afternoon, I believe we got some stuff out from Justin on some earnings for large cap, actually. I think I need to schedule something for right away here. Daily dive, as I mentioned earlier, Christopher Mullen. One story I actually do want to mention is Control Technologies, as Argo just brought up, oddly enough. Apparently, they've entered an agreement with Danby Appliances to manufacture the BioCloud devices. Now, I would shit on this more. However, Danby was involved in the Canadian ventilator program that the federal government ran, so clearly they can make some highly technical medical-related devices. I'm still not buying the whole story, but it is worth noting that Danby is a household name. We're
Argo. We appreciate you participating in the comments, and I'd like to encourage more of you to participate. We've been skeptics of KNR, but I got to be honest with you. If Danby's going to attach their name to this, that's certainly a step in the right direction. I have to say, without knowing anything about the news, that actually sounds like one of the most real things that I've heard come out of the KNR story since probably the company's inception.
Absolutely.
Like in the early days, my understanding was that they are like, until this, they were going to have a scoreboard company manufacture their units. So if Danby's getting involved and they're willing to have their name attached to a press release, that sounds like meaningful traction for the stock and good news for shareholders. Anything else going on today, Jay? Some videos. You talked about Chris Vermeulen already.
Yeah, that's largely it as of right now. I will say that we've got our writing team growing at a rapid pace, so we had a ton of content out this morning. It was a great feeling to know that it wasn't just me in the cockpit there, and I very much appreciate what our team's been doing.
Okay, and Justin, big question for you here is what chores does your mom have lined up for you this afternoon?
I gotta go cut the lawn. I gotta do the dishes. What else do I do? I made my bed. Not the best, but it's there. I don't know.
Well, look, I appreciate you joining us today, Justin. Everything we talk about on this show is not a buy or sell recommendation. This is for entertainment, informational purposes only. If you're looking for that sort of thing, go find somebody who's licensed, not somebody like myself, Jay, or Justin. Look, guys, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that. We'll be back tomorrow with a big 420 show. Wednesday, we're going to look into Lordstown and do a full hour-long deep dive on the air, live on air equity analysis with my man Jay. Possibly young Justin might join us. So thanks for joining us, everybody. We will be back tomorrow with more coverage on small caps. Have a great afternoon, everyone.